All right, friends, welcome to episode 2 of Multifamily Deal Talk, but our first guest. And this guest is somebody that I am honored to have, somebody I would consider to be a friend, a colleague, a mentor, and just a good dude, unless our lunch conversation potentially. But so let me give his quick background and then I'll introduce him. He is an executive managing director at Marcus & Millichap, licensed broker in the state of Texas. Joined Marcus & Millichap in 2004 as a multifamily agent focused on assisting clients in the acquisition and disposition of multifamily properties. He's successfully closed more than 592, let's just round up, 600 transactions at totaling $5.1 billion in value, again, of multifamily assets. And here in North Texas, DFW has been named a heavy hitter several times, has been named a power broker several times, has his master's degree from Texas A&M in land economics and in real estate and marketing as well. He's married, has 3 kids, and his name is Mr. Nick Fluellen. Nick, thanks for being here.
Hey, thanks for having me.
Absolutely, dude. So did I miss anything on the...
Man, all that stuff. I don't know if that's all accurate or not, but it just shows you I've been around for a long time, selling apartments. And it's funny when you think about like, hey, you sold all these apartments over all these years, like the value of apartments is, considerably higher today than it was when I started. So it's really interesting because, a 100-unit deal in 2004 was maybe worth, $3 million. Right. Today it's worth 3 or 4 times that. And certainly I've had deals that I've sold several times in the past that it's fun to see the progression. And then that's kind of what this podcast is all about. It's like, hey, let's hear some deal stories. And so that's fun to look back and recount some memorable ones.
So tell us how you got here.
Well, how I got here as a broker,
just multifamily in general. Yeah. Why multifamily? How about that?
I mean, when I came out of grad school and interviewed with Marcus & Millichap, and by the way, this is the only job I've had since I finished grad school. But I came out and it's actually, I started almost 19 years ago.
That's awesome.
To the day that we're sitting here. So,
cool.
It's pretty crazy to think about what's happened in the last 19 years. But as I was coming into Marcus & Millichap, I really didn't know anything about brokerage. I love sales. My undergrad degree was in marketing and it's with kind of more of a sales emphasis. And always had just interest in real estate. And so putting the two together, I kind of stumbled into brokerage, came into the office, met a couple of guys. One of them was trying to get me to do retail and the other one was trying to get me to do multifamily. And I guess I like the multifamily guy's sales pitch a little bit more, and it just intuitively made more sense to me. Having lived in an apartment complex the entire time I was in college, and so I just went down that road and have never looked back. And here we are, 19 years later.
I love that. Great story, and obviously 600 transactions, and obviously invest in deals and do the whole 9 yards. So very cool.
Yeah, it's a fun business to be in, and it's something I'm passionate about. I know you're passionate about, and you and I go way back a lot of years as well. And so it's fun to see kind of the road that my career has traveled down. But I think it's just as much fun to see people that I've worked with over the years and how just this multifamily sector has changed their life as well.
It's great. So deal time. Cool.
Let's talk deals.
Multifamily deal talk.
Yeah.
Let's talk deals. So I have created a framework that I call the SAFE method. It's how you source, analyze, finance, and exit apartment community investments safely and profitably. I know you got a deal to talk about, so we're just going to run it through that and let's jump in.
Yeah.
Cool.
Yeah.
So tell us about this deal. Is like a favorite deal or just a memorable deal? What's the...
Yeah, well, there's a lot of candidates that we could talk about. Maybe I'll come back.
Maybe be back. Yeah.
Yeah, I'll come back
a couple hundred times here.
Yeah, that's right. I can be a frequent guest on the show. But I think the first one I thought about today is I've invested in, obviously I brokered a lot of deals, but I've invested in a lot of deals as well. And so years ago, I think maybe 2013, we had a deal in the market in South Irving, south of 183, which, some people look at as less favorable than north of Highway 183. Though I didn't necessarily
And Irving's in Dallas.
Irving's in, yeah, that's
North
right.
Texas,
Irving's
so.
near DFW Airport.
Yep.
And so we were marketing this deal, and it wasn't the prettiest deal you've ever seen. Flat roof deal, individual HVACs, just long time owner, a little bit tired, but pretty well occupied. One manager in the office,
How many
one
units?
maintenance guy. It was 132 units.
Okay, so tell us how'd you come about? How'd you source it?
So another guy on my team actually sourced the listing at the time, and so but I was
like a previous client or a relationship, or
new
maybe a
client.
cold call,
Didn't know the client at all.
Got it.
He only owned one or two deals in the Metroplex. He was from out of state, and so, but by all accounts, he appeared to have this thing running pretty well. But I would say the downside in some people's mind was it wasn't in the part of Irving they wanted it to be in, and then just some of the physical attributes and just the age of the property. It was early 70s construction. So anyway, we're in the midst of marketing this deal, and he's replacing the excuse me.
Yep.
He's in the midst of replacing the mansards, which is if you're not familiar with that term, it's a flat roof's flat on top, and then the part that kind of flares out is the mansard part. And he was in the midst of replacing this, and it was basically a construction zone the entire time we're marketing the deal. So it already wasn't the best looking deal in the world, but it was also, has all these workers and shingles flying all over the place, and, work trucks, et cetera. Well,
so based on all of that, obviously your guy on your team brought it in. So that's the sourcing. What was the analysis? So you've given us a ton of background on it.
So
what was your deal story, your upside?
At the time,
how were you guys going to sell it?
Well, it's funny. At the time, again, this is 2013. A lot's changed since then. But at the time, people were just very heavily cap rate focused. They didn't talk as much about a big business plan.
Mm-hmm.
People were starting to do unit enhancement and stuff like that, but it wasn't like everybody just does this every time they buy a deal. And then from the debt side at the time, it's like, if you can get a Fannie Mae loan, that's what you did. You did a 10-year Fannie Mae loan, and generally it was pretty high leverage loan. So, we're going through the deal, and it's stabilized, and it qualifies for the right, loan that most people would want to put on. There's a little bit of work that you could do. But again, this wasn't a time where people were going in and spending $10,000 a unit or $20,000 a unit or $50,000 a unit like you see people doing today. And so this was a few $100,000 renovation, I think, is kind of the thought. So anyway, we're touring the deal. We're not getting a lot of traction. And ultimately, the offers are kind of coming in lower than what the seller expected, lower than what we expected for various reasons. But as I spend more and more time out here, I'm starting to look at this thing thinking, these people are crazy for not buying this. This is a absolute, potential gold mine here if you implement the right business plan. And so I called one of my really good clients who I'd done other business with and said, hey, you need to really dig into this deal. I really like this deal. I would invest in this deal with you. And I just think this is going to be a winner. And so he comes out, looks at the deal, makes an offer.
And so, okay. So again, as part of the analysis, like, what do you think felt like made it a winner? Was it the basis? Was it just the structure of how, was it cash flow? Was it going to be a 2X on equity?
I thought at the time you walk in with really good cash flow.
Mm-hmm.
Even though it was a little tired and all that, I thought, you do some parking lot work, you paint the building, you clean up the office a little bit, clean up the swimming pool a little, add a playground, some grills. There was a chain link fence between the property and the back of like a grocery store next door. And I thought, if you put in a 10-foot wood fence there that would block all of that, I would aesthetically really change the look of the property. And so that's basically the exact business plan that was implemented. I thought you might be able to grow some rents if you did some minor unit stuff, maybe replace some flooring, appliances, et cetera. But in general, the property was really well occupied. And so that wasn't a huge need. It's just something you could phase in over time. And so, so the client believes the story after spending a little time out there, puts the deal under contract, and closes. Well, in the midst of the due diligence, he's also discovers, hey, this water is really high. The owner paid water at the time that was not rubbed back. And
And
so
was so at the time, as you know, like we said, it's changed over the years. Was it all bills paid at the time?
the residents, it was individually metered and individual HVAC. So the resident paid electricity, but the owner paid all the other bills at this point in time. And so basically, the new owner comes in. He discovers during DD that due diligence that the water is really high and the toilets are really old and have huge tanks, and so he immediately comes in, replaces all the toilets. The water bill went from, I want to say, 140,000 a year to about 75,000 a
Wow.
year.
And you said how many
And that
units again?
cost $50,000,
Yeah,
$54,000, I
Yeah.
think was the amount for the water conservation. All up front. The work was done within the first 2 weeks of owning the property.
Mhm.
That immediately changes. He goes in, he does reserved parking, which at the time wasn't that common, but because of the layout of this property, the parking, it was possible to be in one unit and have to park in another part of the property and walk a
So
good
your unit,
ways.
wow.
So implement reserve parking, and those things, they had to stop because they filled up immediately. Like, and you
all
had to
became
have some,
reserved,
yeah,
yeah.
exactly. And so I think ultimately he stopped around 60, went in, started upgrading units. Well, those were flying off as fast as he could get them upgraded. And at one point I remember he had a unit that he was upgrading, and I was an investor in this. That's why I remember some of the details so well. But he had a unit, and it was like the appliances aren't ready for the upgraded unit. And this, so and he said, well, why don't we just try to lease it for the same price without the appliances? Because these appliances are in good shape. They just weren't black appliances; they were white appliances. And so, sure enough, lease it immediately. And it's like, oh, well, I was spending $1,200 a unit. I guess the resident doesn't care that much about this. And so from that point forward, it was like, okay, we'll save the $1,200. We'll spend that elsewhere.
Wow.
Covered one. There was 2 pools, which is a lot for a property this size.
Yeah.
So filled one of them in, built a playground, built a pergola, barbecue grills, etc. And the bottom line is, within 6 months of owning this deal, the new owner was hitting year 5 projected income,
so
which is insane.
I mean, yeah, it is insane. You don't hear about that. So just one step back. So as far as financing goes, did he get the agency financing?
Yes. So it did get an 80% Fannie Mae loan. I want to say the loan was in the low 4s. I don't remember the exact interest rate. Yeah, I do too. Yeah, it was pretty attractive. 10-year. I don't remember if there was any interest only on it. If there was, it might have been a year. It wasn't much. But I mean, again, the cap rates were much higher back then, and so there was still a huge spread, huge cash flow, and especially when you're hitting your year 5 income and in 6 months. So that all was going really well. Well, all of a sudden, it was projected 5-year holds, and so what do you do?
So the initial underwrite, you're touring, y'all are trying to sell it. As on the brokerage side, the initial kind of exit strategy plan was, hey, this could be agency debt, low rate, cash flow. So very quickly, through some minor implementations of upgrades, water conservation, other things, you realize, wow, my exit strategy is completely changed now. And yeah, jump into that.
Well, that's right. Well, so first of all, if you think about it, if you pay 32 a door and put a little bit of money into it, whatever, maybe you're all in. I don't even think he was in at 35 a door, but 80% LTV, you're in it. Your equity is, call it 7,000 a unit, right? So in theory, you need to sell it for 42,000 if you're all in at 35 or so, to get a 2x, right? Well, the projected exit was, I don't remember what it was, but it's considerably higher than that. But after 5 years, well, he's already at the point where I mean, maybe I should think about this sooner, because I've spent all the money I wanted to spend that I set aside for the CapEx, the minimal CapEx that was being done. We're humming. Maybe somebody else wants to come in and throw a little bit more money and expedite this process, and we can hit the same exit price in 2 years versus 5 years. So ended up holding for a little while, but the thought was, obviously, yeah, if you can get that same equity multiple.
Remind me how long of the hold it was.
It was supposed to be 5 years, ended up being 2 years.
Okay. I think I know the deal, John.
Yeah,
I was on the team.
Yes,
working with you in 2013.
That's right.
But even still, be able to go from 5 back to 2 now in 2013 was, were we having a market run up at that time, or was this kind of a one-off? Like,
no,
was it starting to pick up and get momentum?
Yeah. It was a good time. I mean, we were running. We'd come out of the recession, we're running, and deals are starting to flow and all that. But what's crazy. Well, one other point I'll mention, and then I'll kind of talk about what happened with the deal afterwards.
Yeah.
But there was a manager we inherited on that property, and so I know my client he had hired a third party management company, but he really wanted to keep this manager, and she did a good job for the previous owner. Well, the previous owner ended up buying another property and and she ended up going with him after the fact, just because she had a lot more freedom and flexibility because he didn't have a fee management company and all that. And so we ended up hiring somebody else who ended up being twice the manager that the previous lady was. And the previous lady was good, but this new manager was a big part of our success there. So that was fun too. I think a lot of times owners get so fixated in, well, this is working and this is the way it is, and there's no better option than this. And it's just a good reminder that you never, if you look at something through a different set of eyes, there's probably a lot of potential upside that you don't even see. And I mean, she was so great because she was picking out areas of upside. Oh, we should do this, or we could do that. And she really figured it out quickly that, hey, let's take care of these residents. Let's come up with creative ways that we can enhance their living experience while also enhancing the profit and loss statements. And so that was that. And all of those factors contributed to a really successful 2-year hold. Sold it for, at the time, $1 million more than what it was projected to sell for after 5 years and only 2 years.
Goodness.
So great yields. Obviously, all the partners were thrilled. And I think the client felt like, well, don't fall in love with the early 70s flat roof deal in South Irving like that, just take your gains and move on down the road. But as time would, prove, holding that deal would have probably been a better play because the next guy ended up selling it for way, way, way more. I don't remember what the next transaction was, but I know it's sold multiple times since then. And the most recent time it sold for 130 something a door, and essentially 10 years later, a little less than 10 years later, if you'd have just taken that first Manny loan, and again, nobody does that really, but it does make you think, man, I got a great basis on this deal. If I'd have just held it for 10 years and sold it for 130 a door, let's see, that was call it 90 a door more from an equity standpoint than what the basis was. And so if the equity was 7.5 and you sold it for a 90 a door profit, that would have been a pretty good one. It was pretty safe. It was a pretty good one as it was.
100%, right?
And then it literally sold, call it 8 years after the initial sell that for more than double the price on that one. So fun story. There's lots of those type of stories littered into the 19 years in the business, but those are good.
Well, obviously, it stuck with you as memorable, right?
Definitely memorable.
So
definitely memorable.
Awesome.
It's fun to be on the brokerage side and sell your client a deal, but it's also fun to be on the brokerage side when you threw a little bit of money into the deal and got to go along for the ride.
You see the vision, you know what it can be, and then you watch somebody execute. And
absolutely.
Absolutely.
So
super cool. Well, I've got a couple questions, and then we're gonna do something fun.
All right.
Cool. So thanks for sharing the deal story. It's great to hear, obviously, with all of your experience. So what would you say is one thing that you would change about the multifamily business or industry if you could change one thing?
Well, yeah, it's a good question. I mean, I think, I think if I could make better operators just across the board, that would probably solve a lot of problems. I mean, overall better management structure. There are really good companies out there, but there are a lot of people that are really lacking the tools and just the resources to kind of run these deals the way they need to be run. And so, I think the market's been really great here, and people have made a lot of money.
Sure.
Maybe not knowing everything they probably really needed to know. But I think you're now seeing with some of the struggles and challenges in the market, the flip side of that, which is the importance of really good operations. And so I would love it if there were more resources out there for folks to to tap into. And it's just such an easy thing to get wrong. And you hate seeing people have an investment that doesn't
Yeah.
pan out the way that you hoped it would, or that they hoped it would. So,
well, and that's great insight. And I think, something that we say here at our company is, we're buying a business first and it's real estate second. If you don't know how to run a business, right? But a lot of your clients have access to being able to purchase and invest in these deals, but then maybe they're lacking the little bit extra that they would need, right? As far as a business is concerned.
And I think people just underestimate how much of a
intense.
business this is. I mean, it's a business with a lot of moving parts. If you buy a Chick-fil-A, you own the real estate that Chick-fil-A runs their business in, but you just own the building. You're doing nothing, and there's a lot of retail that's that way, single tenant, where it's not much of a business, even even industrial or something that has long-term leases in place. It's not much of a business. But you get into a multifamily deal or a hospitality, hotel deal, like that's real estate combined with a business that's got a lot of moving parts. And so, you better have that part dialed in.
Maintenance. It's great. Good insight. It's awesome. So, any advice you give somebody trying to get into the business, or it's just starting out, based on your 19, 20 years of experience?
Yeah. I mean, I think it's easy to just be paralyzed and not do anything. So you can start small and work your way up to big things. I've got some clients that their progression from what they were doing when I started to what they're doing now is just what everybody's dream would be. It's like, man, I was buying a 15 unit deal, and now I'm buying nice Class A deals, right? Some of the largest owners in this market were Class C chiller, boiler chiller buyers, and now they're some of the biggest owners in the country. And 15, 20 years later. So I think you get your start, small, be a student of this business. I always look at something, if I find an area that I'm weak in, or something that I don't know that much about. As an example, here in the last year, interest rate caps. It's like, I knew what it was. I could tell you what it was, but as far as the nuances of it and what's the market value and how do I buy it and what affects the cost of it, I couldn't have told you a thing about that, because it was never something I needed to know about until I did.
Exactly.
And so I think there's a lot of those things in the business. So just being to start, jump in and start, surround yourself with great people, and then just be a student of the details, would be my biggest advice.
Great advice. And I think the rate cap is a good segue to the last question, which is, where do you see multifamily heading in the next 5 to 10 years? Obviously the environment today is very tough. The Fed has raised interest rates, wildly, I will say. We can say unprecedented or whatever we want to use, but where do you see this heading?
Well, I see it heading up. I see values going up. Everything is going up. And how do I know that? Because I can look back at the charts and I can look back at my own career, but I can look back at the years before my career, and it's incredible. I mean, values go up. Everything's going to be worth more in 10 or 15 years than it is today. And, that is proven time and time again. And I think one thing I always had a hard time getting my mind around when I started was, well, sometimes we'd sell a Class C deal and somebody would be like, oh, I built this thing for 10,000 a unit when I built it. And I'm like, well, we're selling it for 30-something thousand a unit now. And this is early in my career. I was like, it's funny. That's worth more as a Class C deal that's had a ton of wear and tear than when it was brand new. And then I thought, well, what about all these deals they're building today? At the time for, 100 a door maybe, and now multiple hundreds a door.
Plus,
You're like, well, what's going to happen when those deals are C deals? Is somebody just going to be left holding the bag at some point, or is this deal actually going to be worth 300 a door, 400 a door at some point? And that's what's going to happen. It's going to be a C deal at some point, and it's going to be worth more than what it's being built for today. And again, you can go back as long as you want to look at value of anything, and it's going to go up over time. And so I feel great about the space. Dallas is a great place to be. People want to live here. Companies want to bring their businesses here. And so this is the spot to be in. So from an economic standpoint, I feel great about this community and this part of the country. But I think just on a macro level standpoint, I would say that pretty much about anywhere in the country, values are going to be higher 10 years from now than they are today. Now, If you ask me that question, where they're going to be a year from now,
Yeah,
I would have no idea. I mean, I
Look,
hope
you said they're going up, so they're going up.
I
Right?
hope they're going up in the next year. They may go down just briefly before
Yep.
they go back up, but I think the sentiment's very positive, even though it's a tough knife fight out there right now. I do think the sentiment is still positive overall, and I feel really, really fortunate to be in Dallas Fort Worth and be in the multifamily space. Great place to put money.
Yeah, perfect. Cool. This has been good. Let's do something fun. How about that?
All right, let's do it.
This is the segment. It's called buy or sell.
Okay.
Buy, you like it. 10, you sell, or sell, you don't like it.
Okay.
And I'm just gonna throw 10 words at you, and you say buy or sell.
Okay.
Cool. And they're all random. So
okay.
Hunting.
Buy.
Okay, so you like hunting. Cool.
Well, I don't, but I'm investing in a hunting company.
Okay, there
so
it is.
I want everybody to
go
buy.
long hunting.
That's
Great.
right.
Vegetables.
Sell.
Don't like vegetables. Jolly Ranchers.
I personally would say buy. My wife would not let me buy, so I'm going to say sell.
Oh.
My wife's a dentist. She's not. Jolly Ranchers is about the worst. You can just
I think
soak
we've
your
got
teeth
some
in
here,
all
so
day.
you can have some
I
more
know.
tonight.
I'm not. I'm out. I'm on it. I'm selling.
Board games.
Buy.
Okay. Big board game.
Oh yeah.
Monopoly. What's the?
I'm down for any board game anytime.
Okay. The outdoors.
Buy.
Okay. Yeah. Do that.
Colorado. Yeah.
Retirement.
Sell. I like to stay busy. Let's keep it going. Even if you slow down a little bit, I'll always be busy doing stuff. So,
bridge debt.
You know what? Buy.
Okay.
I'm still ultimately in on it, though. Buy with caution.
With
right
caution.
now.
There you go.
Yes.
Like today.
Again, learn what an interest rate cap is.
There you go.
Make sure that works, but matching your debt to your exit strategy is still a valuable thing that people need to do. And even though it's a little murky and messy and people have screwed this up, I still think it's going to be a viable solution moving forward.
So buy bridge debt.
Buy.
But be careful.
Yeah.
PB&J.
Buy.
Okay. Soccer. That's a sell.
I'm probably going to go with sell on it. I mean, this is a World Cup, maybe.
I think this last one's going to be your favorite too. The Texas Longhorns.
Oh gosh, that's an immediate sell. Come on, man.
I thought that might
Sorry,
be the case.
Longhorns out there.
I thought that might be the case. And that's it. Buy or sell.
I like
Lightning
it.
round.
I like it. Hey, stock and Kevin Parrish, buy.
Hey, I appreciate that.
Absolutely, brother.
Listen, maybe not in the short term, like we're saying, but long term. Dude, I appreciate you being here. Sincerely appreciate the friendship. How can somebody connect with you?
I'm very easy to connect with. So multifamilyadvisors.com is our website. It's got my contact info on it. I would love to hear from anyone. Happy to have a conversation with anyone that wants to learn or people that want to buy or put you into touch with somebody that might be able to help you and wherever you are on your journey in multifamily.
Cool, dude. This has been awesome.
Fun. Super fun.
The Irving deal. I'm like, man, I wish I would have.
I know.
Back in the day.
I know.
Very cool.
Don't sell too soon, I guess. That's the takeaway.
Yeah. So we appreciate it.
Awesome. Thank you, man.
We've got like 600 more to do now.
So. Okay. I'm excited. I can't wait for number 2.
So awesome. We appreciate it. Thanks, dude.
Thanks.
Yeah.